traders, and welcome to the Premium Video Newsletter for Thursday, August 22nd, 2013. Ever since I started trading 20 years ago, I would always start with the big picture and work my way down into the details. And this is how I approach my trading analysis to this day, as you might have noticed. And I suggest you do the same. Start with the big picture and the fundamentals and work your way into the setups. It'll give you a great perspective of how markets really work. Starting with the fundamentals, stocks rose in early trading on Wall Street after encouraging economic figures from Asia and Europe boosted the outlook for global growth. In China, a private survey by HSBC Bank indicated expansion, which provided further evidence that the world's second largest economy may be over its recent soft economic hurdle. In Europe, a survey once again of manufacturing and services for the 17 countries that use the euro climbed to its highest level since June of 2011. Today, the unemployment data from the US was released before the opening bell. The number of Americans applying for unemployment benefits rose last week after reaching the lowest level in 5.5 years. But the broader trend suggests companies are laying off fewer workers and could step up hiring in the months ahead. The Labor Department said that applications for first-time benefits rose 13,000 to 336,000, week ending August 17. That's up from 323,000 in the previous week, which was the lowest since January of 2008. Technically, the broad market is still trading below the 50-day moving average, but it's showing increased strength to the upside. Once we move past the 1660 area with some conviction, I believe traders will begin accumulating stocks again. We're not out of the danger zone yet, but as I said during the last few days, there's nothing showing me that a major sell-off is coming our way right now. On the downside, we hit our projected low pivot of 1640, which has been our support area for the last few sessions. And I think if we can get past the 1660 to the upside, we will try very hard to fill the gap and trade back to the 1680 to 1685 area. One of the reasons I have more confidence to the upside is due to the transports, which are trading above the 50-day moving average and look very strong today. I think this momentum will continue into tomorrow, and the next resistance area I'm seeing is the 118 area, where we will either break through and test the upside again or conversely hit resistance and make a head and shoulders pattern. This is not going to happen today, so let's see if we can continue the momentum we've been seeing and close near the highs tomorrow. Looking at the retail sector, weaker earnings and forecasts came out of Sears and Abercrombie and Fitch today, and I think Sears is the oldest retailer in this country. I think this is the fourth day of weak earnings and continued negative outlook from the retail sector. We're still below the 50-day moving average, and we went down just far enough to make some of the large hedge funds nervous and begin selling. But the truth is, with the amount of negative news we saw, the fact that the retail sector did not sell off to the 74 level is surprising, to say the least. What I'm saying is we're very strong in light of the fundamentals that came out. And it looks like the bad economic outlook for retail is already priced into this sector. I really can't imagine anything more negative coming out. We've had company over company saying the same thing in the last 4 days, that the retail is looking bleak. So let's see if we can maintain this level for the next few days and if we can see buyers coming back into this subsector. My goal is to be above the 50-day moving average by the end of tomorrow. So for now, let's see if we can achieve that. If we do, I think buyers will start looking back at this sector, or at least giving it some thought. Lastly, the NASDAQ sector is really starting to show strength. And this is one of the reasons why the sell-off we saw earlier in the week didn't really go anywhere. There's a lot of strength here, and we are already on our way to filling the gap between the 3648 and the 3630 level. And this is a very positive sign, especially in light of the fact that the semiconductor sector is still lagging below the 50-day moving average. Based on the technicals, if we continue moving higher tomorrow, There's a good chance we will test the highs by the end of next week, but I'm watching the sector carefully because I want to see where the selling will begin. I will keep you posted, but for now, the tech sector is gaining momentum to the upside. The big story today that I'm really not hearing anywhere in the news is that we broke the long-term support in the bond market. If you recall, yesterday I gave you my analysis and explained how bonds overreact and how the fact that we didn't see them pull up yesterday was a bearish sign. I explained that if bonds stayed near the lows and didn't really rally too much towards the upper range of the channel, there will be a higher likelihood of a breakdown. And guess what? We saw it today. Remember, price is the best indicator of future movement, and all indicators add a layer between analysis and price. One very successful trader once said that when you use technical indicators, you're looking at price data through colored glasses. And to gain the purest perspective of price, you should just look at price. I somewhat agree and follow this rule, and the bond market told us yesterday that extra downside pressure is beginning to show. As you know, I'm anticipating much higher interest rates, and this will only happen if bond prices go down. We finally have it. So what's next for the bond market, you may ask? Take a look at this long-term chart of the bond market, and now you probably see where I'm coming from. The long-term trend is down, and I think in the next 8 months to a year, we will be moving lower to the 115, 114 level. So for now, let's see if this breakdown is for real, and don't short the market just yet. The bond market is very choppy generally and doesn't trend as well as currencies. So I think we will have time for a pullback and enter then. I will keep you posted, but watch this market for more downside in the next 6 months or so. Looking at the currencies, I promised you I would keep an eye on the euro, because right now we're very close to breakout levels, and many traders thought we would go higher beginning of this week. As anticipated, we broke the low, because traders who got in at a very high level begin really panicking when we don't see the continued momentum, and that's what's going on right now. And although we closed near the high of the session, we nonetheless broke down another level, and it looks like we're going to go down to the 132 level. The strength in Europe that we are seeing right now is something that's already priced in. So we have to see something new, and there's nothing coming out right now, and nothing coming out till the middle of next week, as far as important government reports that could drive prices higher. So let's trade on technicals for now. The market is posed to open higher tomorrow, but I don't know if we can maintain the upside momentum any further, at least for the next few sessions. I'm mixed about this market right now. Until I see evidence of a breakout to the upside, I will be staying on the sidelines. The news out of China also had a positive effect on the Aussie. As I stated yesterday, the Aussie is very dependent on Chinese economy. And if we see some real long-term improvement, the sentiment may change. However, as it stands right now, the best we can hope for is a rally to the mid-92 level. I would need to see a breakout above the 94 level to consider the Aussie change direction. Be very cautious and take only short trades till we have a confirmed uptrend. For now, avoid taking long trades because the trend is still very much down. Oil headed for its first gain this week as a result of the positive news we heard coming from China and Europe. Crude fell $3.61 a barrel or 3.6% over the first 3 days of this week, due mainly to the expectations that the U.S. Federal Reserve will start phasing out its monetary stimuli, possibly starting next month. It's clear from the trading action today that the oil market is not impacted by the drama in Egypt, and that the stimuli is really what's concerning traders who are in the oil market. Looking at the setups for tomorrow, there's actually a 4x4 setup to the upside, ticker symbol SU, and the name of the company is Suncor Energy. I'm actually surprised we're not seeing more setups today, but the market really threw everyone for a range-bound loop yesterday. anyhow, place a buy stop 15 cents above today's high, and if filled, place a sell stop 10 cents below today's low. Remember, tomorrow is Friday. That means we will either have a real quiet day or a real volatile day. We rarely get anything in between on Fridays. Have a great night, everyone, and expect to hear from me tomorrow morning.